Hello everyone, this is Professor Shamal Patil. Today we will be starting the second unit of Management Accounting, that is Financial Analysis and Interpretation. In this unit we are going to learn about the meaning and definitions of financial analysis and interpretation, the objectives of financial analysis, differences between financial analysis and interpretation, types of financial analysis, steps in financial analysis, and various tools of financial analysis. Now, let us understand what is financial analysis. Analysis of financial statement is called as financial analysis. As we all of us know that financial information is the base for preparation of financial planning and decision making process. And this financial information will be available or will be contained in the financial statements. And analysis of these financial statement is called as financial analysis. Now, what is financial statements? Financial statements refers to the statements which give financial information about the concern. That is, these are the statements which provides information regarding profitability position of the firm as well as financial position of the firm at the end of financial year to all the users is called as financial statements. And the types of financial statements are basic statements and other statements. In basic statements, we have profit and loss account, that is income statement. This statement is prepared to find out whether the firm has earned profit or whether the firm has incurred a loss. So this information we get to know by preparing profit and loss account. And the next one is balance sheet. This financial statement is prepared to find out what is the financial position of the firm at the end of financial year. That is, how much the firm has liabilities, and to repay those liabilities, how much the assets firm has. This information we will get to know with the help of preparation of balance sheet. And in other statements, we have profit and loss appropriation account and statement of changes in financial position. Now, let us understand what is the meaning of financial statement analysis. Financial statement analysis is the systematic process of critical examination of the financial information contained in the financial statements to understand and make decisions regarding operations of the enterprise. That is, this is the process which includes the methodical classification and division of financial items given in the financial statements by establishing relationship between them and interpreting the same to the management and to the other users to understand the working of the business as well as financial position of the business. In other words, we can understand financial analysis as it is the process of identifying the financial strengths and weaknesses of a firm by establishing relationship between the items of profit and loss account and balance sheet. That is, here we do the classification of financial items of financial statements, and with the help of this classification we can establish a relationship between these items, and this will help us to understand the strengths and weaknesses of a firm. These are the definitions of financial analysis. The first definition is According to Hingorani, Ramanathan and Grewal, the financial analysis is the process of methodical classification, comparison, raising pertinent questions, and then seeking answers for them is financial analysis. That is, according to this definition, whatever financial statements we get from financial accounting, first we do the methodical classification and arrangement of that financial statements, and then we make the comparison to get the required information needed by the management. We cannot provide financial statement as it is to the management. To get the detailed information, to know the insight about the financial statement, we have to make the classification, we have to make the comparison, we have to do the rearrangement of that financial data, such as like all current assets in one head, all current liabilities, then current long term liabilities, fixed assets. So in this way we have to make the classification and arrangement of financial items given in the financial statements, and then we can apply various tools of financial analysis, and we can get the required information with the help of financial analysis, and same we can provide it to the management. The next definition is, according to Stock Exchange Official Directory, the first step in the analysis is to reorganize the data in these financial statements and make it more intelligible, meaningful by simplification, regrouping, and rearrangement. As I said, we have to make the proper classification, rearrangement, regrouping, and by which we can make the financial statements more meaningful, more intelligible, by which having a glance on financial statements we cannot understand. Like for example, when we see the financial statement, we will not get the required information. So for that we have to make the financial analysis, and all these procedures will be included in the financial analysis. The next process we do is interpretation. Interpretation means to explain the meaning and significance of the financial data in simplified manner. And interpretation includes criticism, analysis, comparison, study of trend, and drawing conclusion. That is, as soon as we finish the financial analysis, the next procedure itself is interpretation, where we have to explain in simple manner what is the meaning, or what is the result of financial analysis what we have done. The definition of interpretation is, according to F. Wood, to interpret means to put the meaning of a statement in simple terms for the benefit of a person. As I said, by looking on the financial statements of XYZ company, the users will not understand what kind of information will be presented in the financial statement, or what is the result of financial position, or what is the result of financial activities of an business organization. And hence, to make more simplify the financial statement, what we have to do, we have to use the interpretation tool, by which with the help of interpretation we can write in simple form what is the meaning of financial information given in the financial statements. Now let us understand the differences between financial analysis and interpretation. Financial analysis and interpretation, these are two different terms. So with the help of these points of differences, we can understand what do you mean by financial analysis and interpretation, and we can easily make the comparison, or we can differentiate easily between financial analysis and interpretation. The first point of difference is meaning. The meaning of financial analysis is it is the methodical classification of data given in the financial statements, whereas interpretation means explaining meaning and importance in simplified manner. Whatever information presented in the financial statement, explaining that information, explaining the meaning of that information in simplified manner is nothing but your interpretation. Next one, contents. Financial analysis involves a systematic and careful examination of the information contained in the financial statements with a specific purpose, whereas interpretation includes, that is what are the contents includes in interpretation is it is the formulation and expression of opinion about the progress, financial position and the future prospectus of the business. So interpretation includes the expression about the opinion of the firm, that is about the financial position of the firm, the progress of organization and future prospectus of the business organization. All these contents will be included in the interpretation. Next points of difference is tools and techniques. Financial analysis uses various tools and techniques such as ratio analysis, trend analysis, common size statements, funds flow statements, cash flow statements, comparative financial statements, etc. Whereas interpretation, no such tools and techniques can be used for doing the interpretation of financial analysis. Next points of difference is objectives. The objective of financial analysis is to know the profitability and financial position of the firm and to understand what is the strength and weaknesses of a firm. Whereas the objective of interpretation is to know the past progress, to assess the present position and forecast future prospectus of the business. The next points of difference is activity. Financial analysis is the prior activity to be done before interpretation, whereas interpretation can be made only after analysis of data. Next point is dependence. Analysis without interpretation is of no use. So we can say that analysis of financial statements will be meaningful if there is a proper interpretation. Whereas interpretation without analysis is not possible, because as soon as we finish the financial analysis, we have the next step itself we have to do is interpretation. The last points of difference is usefulness. Financial analysis draws the conclusions after doing the financial analysis, whereas interpretation explains the conclusions drawn by financial analysis. So these are the various differences between financial analysis and interpretation. I hope you all have clear with the term financial analysis, interpretation and the differences between financial analysis and interpretation. So here I conclude my today's class. In the next class, we will be discussing about the objectives and uses of financial analysis and interpretation. Thank you.